Hey guys, it's James and we're back with video 28 of the series. Today we are looking at how much FDL we need to own to hit $1,000 a month in dividends. FDL is First Trust's Morningstar Dividend Leader ETF. What do we do in this series? If this is your first video watching, we take an ETF and then we go over to its webpage and try to determine what it is doing, what is their strategy or objective to be able to pay a dividend yield or have a dividend yield. And then we go over to Seeking Alpha and check out the daily dividend yield chart and a few of the historical payout numbers, and try to come to a conclusion of what would an average historical dividend yield be. We use that number, put it into our compound interest analysis calculator over here, and try to determine with that dividend yield number how much of today's ETF, being FDL, how much of FDL we need to hold to hit $1,000 a month. And then to round it out, we compare today's ETF with the S&P 500 index. Let's get started. FDL is First Trust Morningstar Dividend Leaders Index Fund. What does it do? It tracks the Morningstar Dividend Leaders Index. Here's a quick description of the index. It selects securities determined by a proprietary screening model developed by Morningstar. These securities have historically maintained consistent and sustainable dividend policies. The selection universe for this index is based on Morningstar's U.S. market index. Securities issuing dividend payments that do not constitute qualifying income, for example, real estate investment trust or REITs, are excluded. Based on forward-looking earnings estimates and indicated dividends, stocks are eliminated from consideration if the 5-year indicated dividend per share growth is less than 0. So they have to be growing their dividend. 1 year estimated earnings per share divided by its indicated dividend per share is less than or equal to 1. So this is an interesting screening method right here, one we don't see very often, and I'm curious as to how FDL performs against the S&P 500 doing this type of screening right here. And then the fourth bullet point, remaining stocks are ranked by indicated dividend yield. The top 100 are selected for inclusion in the index. So it looks like they have 100 holdings. The index constituents are weighted based on the dollar value of indicated dividend payments. Weightings are adjusted so that no individual security is greater than 10% by weight, and securities with greater than 5% do not collectively exceed 50% of the index. The index is rebalanced quarterly and reconstituted annually. So let's head over to Seeking Alpha and see what is actually in this fund. And it looks like they do some rebalancing every quarter and then reconstituting every year. So every year this fund might look a little bit different depending on what the previous year's dividend payouts look like. But for the current year of 2022, ExxonMobil is on top at 9.9% of the fund. AbbVie is 7.07%. Verizon, Philip Morris, and Cisco take the remainder of the top 5 spots. So that's what our top 10 holdings look like, and we have around 100 holdings. Coming over to the daily dividend yield chart, you can see in the past 5-year history, 2017, 18, 19, and 20, it looks like it ranged anywhere from 3.3% to about 4%. So in that 3 to 4% range. And then March 2020, price dropped. Dividend yield artificially went up as the price started to creep back up since the crash of March 2020. The dividend yield started to go down back to our 3 to 4% range, and then we just had a fairly large spike, almost about 1% dividend yield spike. So let's see if that was the market price or they just had a large dividend payout. If we click on Dividend History, we can check on their dividend payouts, and it doesn't look like anything too out of the ordinary. It does look like in the past 5 years that they have trended in the upward direction for a higher payout. If If we take a look at the max payout, this fund started back in June, or paying a dividend in at least June of 2006, and it looks like after about 2009 or 10, if you draw a straight line from here to about there, it does look like the dividend yield, or at least the quarterly dividend payout, has been trending in the upward direction. Let's take a look at the price. So we do see that FDL had a fairly major drop in price here over the past, looks like just the past week or two. They went from 35 all the way down to 32, so that's a drop of about $3 per share, which is about a 10% drop. And since the last dividend payout was actually September 22nd of 2022, so very recent, in the past 5 days, people may have been expecting a larger dividend yield in this time period, and they didn't see it, so they dropped the fund, and then the price went down, therefore causing the yield to artificially go up. So it will be interesting to see what the next quarter's dividend payout would look like, most likely in that 3 to 4% range. So let's go ahead and choose 3.5, because it's been pretty consistent between that 3 and 4% range. Coming over to our compound interest calculator, typing in FDL, just confirming we have the correct fund, First Trust Morningstar Dividend Leaders Index Fund at 3.5% dividend yield. We won't put in the expense ratio, and we won't do any growth and contribution numbers. If we were to play around with the growth and contribution numbers, we would see that, let's say we added $3,000 a month in FDL. It does change the graph here, portfolio value and income, expected income over the course of 10 years. We are looking at in this video how much of FDL, or the amount of this security, do we need to own to hit $100 a month, $1,000, and $5,000? Well, you would need $342,000 of FDL to hit $1,000 a month. Let's see how FDL has compared to the S&P 500 index over the course of its history. So this is portfolio visualizer with $500,000 with dividends reinvested, no new money added, starting at the same time period. If you were to invest $500,000 in the S&P 500 index, or an ETF that tracks the S&P 500 index like SPY, you compare that to FDL starting with $500,000, SPY starting from March of 2006. Going in this time period, FDL, your $500,000 would blossom to 1.6 million with dividends reinvested, and the SPY would blossom to 2 million with dividends reinvested. That would actually give us a cumulative annual growth rate of 7.63% for FDL and 9.11% for SPY in this time period from March 2006 to September 2022. Let's see what it would be if you were to retire on this $500,000. Let's say you were able to live off of the dividend. Well, what type of paycheck would you be receiving? If you were not to reinvest the dividend, you recall FDL, at least in the past 5 years, has been around that 3 to 4% dividend yield, and the SPY is anywhere from 1 to 2%. So double dividend yield. That's why you have FDL. You're not reinvesting that dividend, so you have a smaller return. So without reinvesting dividends, FDL gives you a 3.5% growth per year, and SPY gives you a 7% growth per year. So let's see what those incomes would look like. If you retired in 2006 with $500,000, FDL would have paid you $14,000, and that would have been around June of 2006. In 2007, $21,000 from FDL, 2008, $19,000, and so on. And you come up to the most recent full prior year, FDL would have paid you $40,000, and SPY would have paid you $22,000 in 1 year. That is it for this video. Smash that like button, hit the subscribe button, and thanks for watching.